Hello everyone, welcome to this video. In this video, I want to talk about a little bit about how do we prepare for our first exam. So you should have this packet. The first two pages giving you kind of the outline for each chapter. I would suggest you to, if you look at chapter 1, we talk about the three main parts. Said learning objective 1 was the three sorry, what's the three responsibilities for the managers, and then differences of managerial accounting and financial accounting, and then kind of the requirement from the IMA Association. Look, I use this as the outline. Also, blocks of the chapter 2 managerial accounting, three types of the companies. We said we have a service company, and then we said we have merchandising, and then we have manufacturing. So those things you can take them as kind of the outline. Remember, especially for these three types, we said for the inventory, right? We said service, there is no inventory. Merchandising, we just have one type of inventory, and then which is, the already finished goods, right? You go to Walmart, you just say this pen, you don't say half a pen, right? Merchandise, manufacturing, we have three types of inventory. We have material, raw material inventory, we have working process inventory, and we have finished goods inventory. So that is kind of an important part in chapter 2. And then we said what inventory is important. Basically, under balance sheet, you have this inventory for your current assets. But when you sold them, right, when you sold your inventory, it goes to income statement and became our cost of goods sold. So service, you don't see cost of goods sold in the income statement because there is no inventory. Okay, and the value chain also talking about those different parts. I'm not going to read. Go back to our textbook, cost objects, direct cost and indirect cost, right? And then talking about product cost and period cost. We said the service company, there is no product cost. Merchandise, three parts, right? Three parts of product cost. Purchase price, for the shipping, and then if you buy overseas, how about the customers, tax, and then manufacturing, direct labor, direct material, manufacturing overhead, you should be able to know those things. Prime cost for manufacturing is direct labor and direct material because we think they are prime, they are the major part. And conversion costs, they are direct labor and manufacturing overhead. Those are the costs to convert direct material to your products. So those are from your textbook, page 58. And then also, we talk about cost of goods sold. We said merchandising, you just need to get, basically it's beginning plus your purchase, right, including your shipping, including your tax, gives you ending inventory plus your cost of goods sold, right? So you can get your cost of goods sold by one step. Manufacturing, how do we get our cost of goods sold? Go back to your quiz 1. You go back to quiz 1, the 20 hours or 20 that quiz, go back to our textbook. So we first need to get our raw material used. We need to get our raw material used, and then beginning plus purchased equals ending plus raw material used. And the second step is we get the cost for the products manufactured, right? For the products manufactured. You have a working process, beginning, you plus direct labor, you plus your raw material used, you get the total cost manufactured, you minus your ending inventory, ending finished goods, ending working process, sorry about that, minus ending working process, you get your cost of the goods manufactured. And then third, you get your cost of goods sold, right? You get your cost of beginning finished goods plus your manufactured equals ending finished goods plus your cost of goods sold. So remember those three steps. Go back to your quiz one more time, go back to your textbook. And this is repeated several times in the active duty. So we said never use fixed cost per unit to make the decision making. Right. Okay, so next thing, I'm talking about chapter 3, job costing. We have been talking about this many times. When do you use job costing? When do you use process costing? We said if it's unique, kind of like, especially service, you have different clients that like expensive things, big things like airplane, those things we use job costing. Process costing is more mass product, like very the same, identical, like for drink, for cheese, those things we use process costing. Go back to our textbook one more time, when we use this system, when we use that system, right? We said for direct labor and direct material, we always trace them. We just trace them, but we allocate our manufacturing overhead. I've been talking about this a lot of times. Go back to your please too. Make sure you get your rate, which is estimated or budgeted, manufacturing overhead divided by your estimated cost driver. We said can be many things, different labor, different machine hour, direct labor, direct machine hour, or the labor cost. Read your question carefully. The question will tell you. So we use estimated to get a rate. And once you get a rate, make sure you use the rate to time your actual cost driver to get your allocated manufacturing overhead. Cost of product, which is your inventory, we said direct labor, direct material. Ideally, we use actual manufacturing overhead, but in chapter 3, we said we use allocated because it's really hard to find out which part is the actual manufacturing overhead. So we use allocation first, and then at the end of the year, we do an adjusting journal entry for our manufacturing overhead. We compare our actual with allocation to decide our adjustment. So your estimated manufacturing overhead is only used to get the rate. Your actual manufacturing overhead, every time when you have manufacturing overhead, you accumulate it to actual. It's kind of like a pool, but you do not go to that specific job. You just hold all of the manufacturing overhead. You wait until you assign, you allocate that partial to your that specific job or work in process. At the end of the year, you compare your actual with your allocation to decide the other adjustment. Okay. Chapter 4 talking about ABC costing. We said why you have cost distortion. Basically, we said the traditional allocation, which is also called the plant-wide allocation, which is in chapter 3. They may not be accurate, especially you have different products, they use different departments, to different extent. So maybe it's not accurate. We're still talking about the allocation, right? We said this is all about allocation. It's not the actual, it's just how do you divide our piece up. Departmental manufacturing overhead, this basically is similar, but you do this for each department. ABC costing, cost hierarchy, there are 4 different unit level, batch level, product level, and facility level. Make sure you read your textbook. Okay, chapter 6, talking about cost behavior. Basically, it's just our variable cost and our fixed cost, right? We first learned absorption costing is for external. We said absorption costing is what we have been learning. So it absorbs absorbs all the manufacturing cost. Direct labor, direct material, variable manufacturing overhead, and fixed manufacturing overhead. And then the format is like this. We have our cost of goods sold, we got our gross margin. Variable costing for internal based on variable cost or fixed cost. Make sure you know what's the meaning of variable, what's the meaning of cost. Fixed cost. So your inventory only have a variable manufacturing cost, direct labor, direct material, and variable manufacturing overhead. The fixed manufacturing overhead goes to your fixed cost, and expensed immediately. We also talk about the different situation. If your production is more than sales, our absorption costing will give you higher amount than the variable costing. Then the difference is like this. We do an example together. And then we talk about all these equations. Make sure I'm not going to read too much, but make sure you know what's the meaning and high-low method, regression analysis. Okay, so I go to this example first, right? I said what's the product cost and the variable costing. We said it's all the variable manufacturing cost. So it's direct labor plus direct material plus our, that's all, right? Because you don't have variable manufacturing overhead, that's all. So you get a 2 plus 3, you get a 5. That's your variable costing method, the product cost. Absorption costing, it absorbs all the manufacturing cost, right? So we get direct labor, direct material, and manufacturing overhead for each unit. It's 2 plus 3, and then we plus, total is 100. We produced 20 units, so we get 2.3 plus 5 gives us 10, right? So our product cost for absorption costing is $5 more than under variable costing method. I'm not going to ask you to get the operating income step by step. It's a lot of work, but you need to know which method has higher operating income. When we produced the 20, we only sold 16. So our production is more than sales. You need to know, I'm sorry, but you have to memorize this. We said variable, the operating income absorption costing will be more than variable costing. And by how much? We said by how much? The difference is your ending inventory time, your fixed manufacturing overhead for each unit, right? We produced the 20, we sold 4, we sold 16. So we have 4 ending inventory, right? We have 4 ending inventory, and each one we allocated $5, right? We allocated $5 our manufacturing overhead, fixed manufacturing overhead. So our total difference is absorption costing method will be $20 more than absorption costing method regarding the operating income. Okay, so this is what you need to know for chapter 6, and then I'm going to do the second part is I'm just going to go through this multiple choice, each one, kind of quickly, briefly. So maybe boring. Hopefully, you don't need to watch this if you get all the questions correct. Which were the following responsible that we said you evaluate the results with a budget. Basically, it's the controlling, right? So this is from your textbook. I need to get my textbook. Sorry about that. Sorry. So you need to get. I'm not going to do this for each question. It takes a while. But go back to a textbook. Kind of this is on page 3. So I'm going to do next one. Okay. Managerial accounting differ from financial accounting because managerial accounting, this is from this page 5. So make sure you read this table. Tend to report on the company. No, we said the financial accounting doing as a whole, right? Management is the segment, so this is not right. Emphasize data relevance, so this is right? So we said managerial accounting thinks about relevant, cost, financial accounting thinks about objective. So this is right. Used primarily for external, no. Managerial is for internal, financial is for external. Required by GAAP, no. Financial is required by GAAP. Managerial has no requirement. Which of the following said requirement to be developing their knowledge and skills, right? Which one we go to all this page is page 13. You should be able to find out basically it's the competence. So you need to be able to do your work. You have to keep improving your skills. Which I would have said you cannot disclose private information, confidential, right? So you go back to each one, kind of get the general idea, especially for chapter 1. Which were the following 3 primary responsibility: planning, directing, and controlling. I think this one. So sorry, one more time. It's from here, from just here: planning, directing, and controlling. Next one. Which of the following is integrated? So basically, it's your decision making, right? Textbook told you decision making is integrated with all three parts. Sorry, I cannot say it's there. So okay. So next one said which one of the following is false? Is false about financial management accounting? Management prepared annually. This is wrong, right? Management, there is no requirement. Basically, whenever you need your reports, you prepare. So this is not right. So answer is A, very obvious. And then next, choice B, management accounting primarily internal, perfect, right? Financial external. Manager is relevant, financial is objective. There is no authority required for management, SEC and GAAP, right? For financial, which is true. Managers are concerned with external. No, we said manager is internal. Manager accounting relies heavily reliability. No, manager accounting is for relevant. Financial is objective. Format of manager accounting, no, there is no format. The manager has to be relevant. Okay, so that is chapter 1. You know, go back textbook, read the concept a little bit. Which of the following type of company would have work in process, or work in process? So this is only for our manufacturing. This is only for our manufacturing. Sorry, but I want to show you. I want to show you only for manufacturing. So you have working process. You have a working process for manufacturing, right? So you have working process. Sorry. That table is important. Make sure you read that one. So we have manufacturing, which of is not active in value chain. So make sure you read the value chain. It's basically on page 52. You have all this part we found out administrative is not. And the cost can be traced, will be called as direct cost, right? Can traced is called direct cost. Sorry. So it's traced, you call it direct cost. Direct cost can be traced, right? Next one, period costs are also referred to as operating expense, right? Period cost. Remember, product cost and the period cost. So we have page 57. You have a product cost and period cost. Sorry, maybe you cannot see clearly. Product cost and then period cost. And then here said period cost often called as operating expense. Okay, so that is from the textbook. And the next one, conversion cost, we said is direct labor and then manufacturing overhead, because we think conversion cost basically is how do you convert your material to our finished goods. So we use direct labor and manufacturing overhead to convert. Which of the following is not a part of manufacturing overhead? We said manufacturing overhead has direct material, no. Manufacturing overhead has indirect material, indirect labor, and other. So this is from your textbook. Sorry, it's here. Indirect material, indirect labor, and other. So this is period cost. The period cost definitely is not our manufacturing cost, right? Which of the following will always have cost of goods sold? Will always have cost of goods sold. So it's basically whenever you have inventory, you should have cost of goods sold. And then the two types through the merchandising and the manufacturing. If the company doesn't carry work in process or raw material inventory, what type? So this question, personally, I don't think it's well written, honestly. But the answer is merchandising, because we don't have working process or raw material. We just have the inventory. We just have the finished inventory. Service, there is no inventory at all. So question asks you have inventory, but it's not working process inventory or raw material inventory. So it should be merchandising. Basically just to finish the goods inventory. This is question 8. I don't think it's well written. I understand the question, but question 9 is the same, sorry. Which one is not a value chain? We talk about that human resource is not value chain, kind of similar with administrative. Because value chain is more related with your product, customer, your product, marketing your product, produce your product. Human resource is more like internal humans, so it's not our value chain. Value chain talking about how do you create value for your products. Work in process include work in process. This is raw material, right? So this is raw material, finished goods. This is finished goods. Goods are in the manufacturing, right? So this is work in process. Goods has been shipped, so that will become cost of goods sold. So this is material. So this is material. This is your finished goods, right? Finished goods. Sorry, that one. Okay. Which of the following is a direct cost for the wine? Direct cost, utility not direct, taxi not direct, insurance not direct. So grape is the direct cost, right? You can trace it directly. Which one is not a component of manufacturing overhead in the production of wine? We said not manufacturing overhead. We talk about manufacturing overhead. Written on basket. This is indirect material, right? Depreciation, salary of supervisors, indirect labor, oil, kind of other, overhead. Crushing labor, this is your direct labor, so this is not manufacturing overhead. Which of the following has all costs along the value chain as the period cost? Which one has all the steps as a period cost? Which means there is which means no product cost, right? No product cost, which means no kind of cost of goods sold, which means no inventory, right? So think about which one then is your service company. Next one, question 15, which of the following is a period cost? Direct material, no. Plant supervisor, manufacturing overhead, this is direct labor, so advertising is your period cost. Next one, let's see, asking about the cost of goods sold. Cost of goods sold, how do you get cost of goods sold? It's your beginning plus your purchase or production gives you your ending plus your cost of goods sold, right? Cost of goods manufactured, so this is your manufacturing cost of goods manufactured is 25,000. Beginning is 4,000. So you have 29 to sell. And you didn't sell all of them, you still have 6,000 left. So what is your cost of goods sold? Should be 23. Administrative, those two, they are not relevant information. Which of the following is not a variable cost for a plant that manufactures iPod? Okay, it's not a variable cost. A plastic that is employee, this is a variable. Assembling straight line depreciation, that is not a variable. This is your fixed cost. The straight line, remember if you have learned 200 class, to be able to know straight lines, no matter how many units you produce, it's straight lines the same. So this is your fixed cost. Answer is C. Next one, asking you about your cost per unit. So you have all these parts, cost of your, okay, so you have a direct labor, direct material, and overhead 20,000 plus 15,500 plus 5,500. Totally produced 50,000 units. If you do the math, the answer is B, 82 cents. Next one, chapter 3, for which of the following would not be appropriate. So we said we shouldn't use job costing. We should just use process costing, which is the mass-produced beverage, right? We said the others, they should be used for the job costing method because they are individual, they are different, they deal with. So if you look at textbook 105, they talk about process costing and job costing. Gives you some ideas. Sorry about that, but it's here said. Sorry, 1 second, what I'm trying to do. You see, mechanics, plumbers, and electricians, they use job costing, right? So that is, they use job costing for services, especially, and the customer ordered, so you need to use job costing. The amount of manufacturing overhead on the job recorded to the particular job is found out. So we said, how do we get our manufacturing overhead? We said we allocate. Right, we allocate. We don't really know. We cannot trace it because it's indirect cost. So we have to allocate. So you never see trace overhead. You always allocate. So you have to allocate. There is no choice. You have to allocate. Okay. Whenever direct labor, direct material, they are used manufacturing. So what you will debit. So when you use direct labor, direct material, and then when you allocate your manufacturing overhead, sorry, actually this should say allocate, right? Allocate manufacturing overhead. You need to debit your work in process. You need to debit work in process. Okay, so this is from your textbook journal entry. I'm not going to say too much. You should be able to comfortable with your these journal entries. When the job is completed, we said when the job is completed, should be moved to what, right? We said when it's complicated, so we decrease working process, we go to our finished goods, right? We finish the goods. So that is our answer. We move from working process to finished goods. Which of the following would have its cost accumulated using process costing? Which should we use process costing? This is manufacturing, because these are, unique, important, and then dinner restaurant, I order pizza, you order pasta, so that is different. Fishing supplies, they are mastery, the same product, so we use process costing. Which of the following would use job costing? Okay, when will you would use? So we said it's the healthcare provider, because each customer, each patient, they are different. The others, they are very similar product. Which of the following is used to document manufacturing of oh, sorry, this one you don't need to know. Yeah, this one you don't need to know. Sorry about that. You don't need to know this question on. Okay. I told you to read textbook and know all the documents, but honestly, sorry. Oh, let me see. Which of the following is used to document manufacturing? Oh, sorry, you need to know. Sorry about that. So we said, when do you have direct material, direct labor, and manufacturing overhead? This is also your allocation. So we said it's basically recorded to working process. Sorry about that. So it's recorded in working process inventory. And then when accounting for material and labor, material used. So when we use material, we put work in process, we decrease our raw material inventory, so should go to our working process, right? So should we go to our working process, debit working process. When accounting for material and labor, indirect labor is recorded. When we have indirect labor, look at your textbook, indirect labor, indirect material, indirect labor, sorry, it's just here. So we did increase our manufacturing overhead because we cannot put a working process because we don't know how much we should put. We wait until we allocate. So we increase our work in process. We increase our salary payable. Oh, sorry about that. We increase our manufacturing overhead. Sorry about that. Because we cannot trace it to specific job. So we put manufacturing overhead first. We put manufacturing overhead first, and then we allocate to each job. Sorry about that. Talking too fast and too much. Next one, talking about the predetermined rate. We said that this is basically your budgeted manufacturing overhead divided by your budgeted driver, and then we said based on machine hour. Right? The person told you very specifically based on machine hour. Sorry. So actual not important. We said manufacturing overhead we budgeted is 50 million, and then we budgeted 5 million machine hour. So each machine hour has to be $10 of manufacturing overhead. Next one, talking about you sell a job 5,000, right? So when you make sales, you increase cost of goods sold, you decrease your finished goods, which gives you the answer D. Answer A, finish goods, and then credit working process is when you finish your production. It's not when you sell. And then you don't have this one. You never sell your work in process, right? In fact, nobody will buy your part-made products. Okay, so question 14 talking about how do we adjust our manufacturing overhead. So we said manufacturing overhead left is always your actual, and then your right is your allocation. So actual is 7,100, allocation is 6,900. And then the estimate is not important, so we have this 200 left, but we want it to be 0, so we have to credit 200, we debit cost of goods sold. Debit cost of goods sold, we credit manufacturing overhead. So that gives you the answer A. Next one. Tired. Question 15. Okay, question 15 talk about cost of your job. So we said basically direct labor, direct material plus your allocated manufacturing overhead. And then we said your allocated predetermined rate is $15. So this is your predetermined already. You already got this rate, so you don't need to worry about the estimated this and then estimated job hour. You have to use your predetermined rate time your actual cost drivers, right? Time your actual direct labor hours. So our direct material is $50. Looking at here, direct labor is $75 per hour. You use the six hours, and then our allocated manufacturing overhead, we said $15 per direct labor, and then we use actual direct labor is 6. We don't use the estimated. So if you do all this, you should be able to get answer E. Surprisingly, Russia A, B, C, D, but this one is E. So okay, I think that's all about chapter 3. Chapter 2, chapter 3, they are very important chapters. Go back to our textbook, especially 2 quizzes. Make sure you understand everything. Chapter 4 talking about cost distortion. We talk about that. Is that said that's the reason why we have the department manufacturing overhead or ABC costing, because we think the traditional just the one rate is not enough. So we have to use more accurate one, because we produce different products and each products use different resources or use different extent of the department, or so those things. So let's say it occurs when department different type of overhead, right? Product they use different. That's the reason. If you just use one type, then you can use the plant-wide or traditional way. Chapter 3, the rate or product rates use the same, then you don't need to use the departmental. And then next one said company use departmental rather than single plant overhead. No, this is not when you have distortion. You have distortion is you should use when you use department, that's good. That's good. So you have distortion is when you should use departmental, but you use the plant wide. Okay. Active next one said no matter how many units, batches, or product, so no matter whatever you do, you still have to pay that cost, like CEO salary, like rent, you know, like the insurance, that is the facility level. Next one talking about not favoriting department overhead, right? We said, so you don't need to use department. You can use the plant wide. Is when this one, each department is different, so that is wrong. If you have a different type, you should use the department overhead. All department is the same. So if all the department they are the same, then you just need to use the plant-wide rate. You don't need to use the department rate. Okay. So make sure question 3 and question 1 they are kind of similar. When do you use department or when do you use the plant-wide? Active base helps to we said it is more accurate, it reduces cost distortion. Active ABC costing is not departmental, so departmental is departmental. Active ABC is based on the activity, it's not based on department. Allocate, no, you never allocate direct cost, right? You always trace direct cost. develop a plant-wide. No, ABC is not about plant-wide. Cost to set up a machine, we said this is batch level. Whenever you set up a machine, you can produce many units. So this is definitely a batch level. Sorry about that. I want to show you very briefly, quickly, I think. Okay, so this is the cost hierarchy, and then we said the batch level. Make sure you read all these examples. Where is it? One example would be machine setup, right? One example would be machine setup. Okay. Question 6. Oh gosh, chapter 6. Okay. Which one is true? Total fixed cost? No. We said in the certain range, right? Total fixed cost is constant. The total fixed cost decrease? No. Each unit, when your volume increase, your each unit will decrease. So that gives you the answer D. Make sure you know what's the meaning of fixed cost and then the variable cost, right? So basically, fixed cost, we said the per unit, right? When volume goes up, then per unit goes down. In the cost equation, why is this the term V stand for variable costing? This is your variable cost per unit. This is your variable cost per unit. So if you look at your textbook, so this is your variable cost per unit of your coefficient of the slope. Okay. X equals this, and then total cost will be said y is Vx plus F, and is V is 100, X is 35. We plug 1,000 there, fixed cost, and then so that gives us the answer A. What's the meaning? Okay, what's the meaning of this equation? So fixed cost means no matter what you do, it's there, it's not changed by your cost driver. So this is no matter you have your cost driver, no matter you have your customers, yes or no, you have to pay $1,000. And then this one means this is your actual number of the customers, and then the 100 is the slope of the X. So that means one more customer or one more activity will increase the cost by $100. So that is what we say the V is variable cost per unit. So 1 unit of your X will increase your Y by $100. So now you have 35X. So your variable cost will be 3,500. Then you plus your fixed cost 1,000 gives you 4,500. Next one, which of the following is true regarding variable costing? Let's see, variable costing, right? It treats variable manufacturing overhead as the product cost. Variable costing treats variable manufacturing overhead as the product cost, but fixed manufacturing cost as the period cost. It is allowed by GAAP. No, we said it's for internal. It treats fixed manufacturing as a period cost. Yeah, this is right. It's not allowed by the IRS. Forget this one. Within a relevant range, cost that increase in direct proportion of volume will be our variable cost, right? So you drive 1 more miles, you have to pay $2 of gas. Which of the following is not true about per unit within the relevant range? Fixed cost decrease, that's right. Mixed cost decrease, but not indirect. This is right. We didn't talk much about this. Is right. Variable cost stay constant because it's per unit. So we didn't talk about D, but you should be able to know A, B, C. They are correct. So D is wrong. I don't know why it's wrong. I didn't read the textbook, but you will not be tested D. You just need to know A, B, C. They are correct. Question 7, talking about this, and let you write your equation. So this is our proper equation. It's your variable cost, fixed cost, and then your slope, right? A utility bill consists of a monthly base. So this is your fixed cost, right? and then also additional amount based on usage. So this is your variable cost. So you have fixed cost, you have variable cost, then total you have to be a mixed cost. Okay, question 9 and question 10, they are similar. So let me just use this back to do this equation for you. Sorry, I'm just a little bit tired. I want to explain question 11 and 12 first. So I'll just leave 9 and 10. Which of the following is true regarding regression? It's a regression, they use all the data, so it's more accurate, right? It's more accurate. Regression helps generosity called R square show how well, this is right? Regression we can only be used no without the regression. We didn't say, but you know it can be used for anything. So answer is B. Difference between absorption cost and variable costing is how do they treat fixed manufacturing cost, right? How do they treat fixed manufacturing cost? Okay, that's the two questions, question 9 and question 10. So we told you that you're thinking about analyzing your mixed cost. July, you have a high-low method, right? So you have labor hour. So this is your cost driver. This is your X. Is 14,000 and the cost is 40,000. So this is your Y. February labor this and the cost is this. So we have high and low method. So your slope we said is your Y high minus Y low, X high minus X low. So Y high is 40,000 minus 25,000, and then 14,000 minus 8,000. Make sure this is X high, X low, Y high, Y low. So if you do all the math, you should be able to get the slope is 2.5. Okay, and then we put our Y equals 2.5x plus your fixed cost. We can just pick any one. You want to pick high, you want to pick low, either one is fine. So I think I picked the high. So I put is Y is 40,000 equals 2.5 times your X became 14,000 and plus your fixed cost. So your fixed cost has to be 5,000. And now your equation is, sorry, I'll go from here. So your equation is Y equals 2.5x plus 5,000. So this is your fixed cost. No matter what you do, you still have to pay the 5,000 cost. And then the 2.5 means per unit of the X. So when you have one more direct labor, your cost will increase by $2.5. Okay, now we make prediction. We said next month will be 12,000. So that is your X, right? Y equals 2.5 times our X is 12,000. We plus this 5,000 fixed cost. So if you do all this, you should be able to get the answer is D. Okay, thank you so much. Thank you so much for watching this video and then finishing all the problems together. Make sure you also check the active duty. You also read all the assignments, other assignments, you know, check textbook, handout, you know, notes, and then quiz, everything. Good luck with your exam, and email me if you have any question. Thank you.